You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. And before we start the show, I just want to remind you, if you haven't done so already, I know a lot of you have, but there might be a few of you out there floating around who haven't had a chance to check it out yet. Don't walk over to your app store for your mobile devices, whichever devices you may have. It could be the iOS app store for your iPhone or iPad or iPod devices, could be the Google Play app store for your Android devices, even the Amazon app store for your Kindle Fire devices, and download the Options Insider Radio Network mobile app. I really think you're going to like it. You can, of course, instantly stream all of your episodes of Volatility Views, get access to all of the archives. You can download them if you want to listen to them maybe when you're on the commute or on a plane, somewhere else where you don't have access to a good signal. You can download them ahead of that so you can have them ready to go. And, of course, you can access the full suite of other programs on the old Options Insider Radio Network. I believe we're up to 13 as of this moment, and more are coming down the pike. So if you ever wondered how you can get all of our programs in one place, maybe you don't use iOS and you don't subscribe to our main network feed, or you don't come to the website, or wherever the case may be, this is probably the easiest way to get access to all of our stuff, particularly on Android. I know a lot of you guys on Android. There's such a diverse array of handsets out there, such a diverse array of podcast listening programs that it can really become kind of confusing. Here it is all in one place. Really easy. The Options Insider Radio Network mobile app. Check it out in your app store of choice. All right. And this is, of course, Volatility Views, the premier program for volatility traders. And once again, we're going to have a little bit of a truncated program, partially because it is high conference season here in the world of options and indeed derivatives. In fact, if I sound a little bit different this week, it's because I'm recording on location down here in Florida. I am actually between events right now as we speak. I have just come from the Futures Industry Association conference, a big conference for the derivatives world down here in Florida, and I'm on my way to the Risk Management Conference, which is a big event, particularly for the listeners of this program, because it is very focused around volatility and volatility products. I love going to this event because a lot of the audience of Volatility Views is there. A lot of our guests who've appeared on the program will be there. So it's kind of a fun, almost alumni of Vol Views reunion type event, which is really fun. And you also get to hear about all of the latest research and developments in the world of volatility. Unfortunately, as you're listening to this on Monday, I will just be attending the event then. So you have to wait till next week, unfortunately, next episode, to hear all of the latest developments from the world of volatility research and analysis and trading. So until then, we're going to keep on rolling right on into our first segment, the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, and welcome to the Volatility Review. This is, of course, the portion of the program where we look back on the week that was from a volatility trading perspective and a volatility activity perspective. And it was indeed a very, very active week for a variety of reasons. A lot of volatility news in the headlines this week. As we are recording this, it is middle of the trading session here on Friday. Most of the major indices are pretty much unched, a bit of a quiet end to the week, even though VIX cash still ticking up, still getting a bit of life. People obviously having some very, very real fear of weekend risk going into the weekend. Even though the indexes are essentially unched, they are chasing that premium going into the weekend. VIX cash up nearly a full point at this point. We'll see if that continues for the rest of the day. If you've been around options for any period of time, you know that usually is not the case. Usually going into the weekends, the market makers like to take that premium out, keep it in their back pockets. Clearly that is not the case today. So even with the underlyings unched, they are bidding up some of this premium, some of the vol out there in the SPX. No doubt, given the fact that we saw such an aggressive sell-off yesterday, that's probably what really people are driving that for. They really are concerned that some other shoe will drop in the Ukraine over the weekend, and they want to hedge against that. And let's get into that, because yesterday was pretty much the biggest vol story of the week. The fears coming into the marketplace over the increasingly eroding situation out there in the Ukraine, and with Russia sending the market into a tailspin yesterday. Most of the major indices off well over 1%. Not surprisingly, VIX cash getting a tick up, about 2.5 handles throughout the day. Perhaps not as aggressive as some people might have thought, given the ferocity of the sell-off, given the apparent, at least on the surface, fear that was percolating through the marketplace. That's usually a scenario where you will see people diving into the options for a variety of different reasons, looking to get some liquidity against their underlying positions, looking to get out of their underlying positions, and also, of course, chasing up the premium on those tail risk type positions, looking to lock in some hedges for their long positions. And yet we didn't really see a lot of that. We get to talk to a lot of different outlets and a lot of different BDs and others throughout the marketplace on any given day, institutional, retail, what have you. And most of the narrative, and that is certainly reflected in what we saw in some of the VIX cash movement as well, is that it was a relatively orderly sell-off. And even though on the surface it may have appeared to be people really stampeding, heading for the exits, that really wasn't the case. Underlyings obviously took a hit, but in a scenario where people are really stampeding for the exits, you will see all of the other aspects of that playing out in the options market. You'll see people chasing the tail risk puts, people running to dump calls and vice versa, and a lot of other types of trades designed around that type of marketplace. And we didn't really see that. We didn't really see people lifting a lot of offers on puts. We didn't see a lot of other things that you might associate with such an aggressive sell-off, which is kind of interesting. It kind of, in some ways, is almost reminiscent of what we saw at the beginning of the year in early January with some of the more tax-driven type sell-offs where the underlying took a hit and yet people weren't stampeding for the exits. People weren't racing to lock in their hedges. Part of that could also be going back to what we spoke about with Chris Cole and Jared Woodard and some of our earlier guests on the program this year about the fact that people have now put on some of their hedges, so they are a little bit more relaxed, for lack of a better word, in the marketplace. These pronounced sell-offs are not causing as much consternation because they have already put on their hedges. In fact, we talked recently on the program about how in those moments when people are chasing the puts and bidding up that premium in the quote-unquote black swan wing of the put wing there, that those are the periods where the markets going forward perform as the best, which is also a very counterintuitive result. So we might be seeing a little bit of that here where people already have put on some of their protection. So even though in a pronounced period of sell-off, we're not seeing much of an aggressive move. Of course, some of that also playing out today. Part of that probably the reason why we're seeing vol creeping back into the market today, even though everything else is remaining unched. So interesting things at play out there in the realm of volatility. Of course, talking volatility, talking VIX, we have to also hit on VXST. In fact, this is the time that it would be this is the perfect time frame to have a VXST option. We've talked in the past about VXST futures not really lighting up the tape, at least not as much as a lot of people had hoped, given the lead up and the ramp up to the launch of this product. They're doing 50 or 100 contracts a day, maybe a little more, maybe a little less, but certainly not knocking it out of the park, from a volume perspective, the way a lot of people thought. But this environment we're in right now, this with the Ukraine tensions and the macro tensions and dramatic swings in the S&P any given day, this is the perfect environment for that type of product, which you referred to in the past as almost more of a gamma of a vol type product, very much a vol type product, and it would be ideally suited for a period like this. Of course, we have the futures. They're still trading a little bit, but this would be ideally suited for options on the VXST. I think that's really what everyone is waiting for. That's what is really going to have to kick off to get the futures volume going and to really give this product some life. And we just heard yesterday, you might have seen it on their website, the Options Insider. We reported on it from the big FIA conference here this week that CBOE has finally announced. In fact, I think someone wrote in last episode asking this exact question. They wanted to know, when are the VXST options going to be listed? Well, we finally have the answer to that. It is April 10th. A little bit longer. I think a lot of people wanted to wait. They were hoping to have their hands on these products before the end of the month. But c'est la vie. We have to wait one more month to really sink our teeth into the VXST options. Someone else I was speaking to recently probably made a good point as well. They said that it probably isn't a time that a lot of liquidity providers want to be listing a new product like this anyway. You want to you have a little bit of a shakedown period. You have a little bit of a learning curve whenever you list and launch any new product. To launch a product like this in the heels of such a crazy environment where, while it might be great for the end customer, it might be a little bit dangerous, a little bit risky to have your ramp-up period in a product like VXST in an environment like this when the Ukraine is literally melting down. So I'm sure there are a lot of liquidity providers out there who are a little bit thankful that this date is coming a little bit further down the pike than some people may have expected. Other big developments in the world of volatility and volatility trading. Of course, we've talked a lot about VXX. I know that is a vehicle that still, despite all the things we've said about it here on the program, a lot of you, particularly in the retail world, love to pile into this product. For some of you, for the right use case, very, very short-term type trading. Some of you for the wrong use case. We won't dive into that here. We do have a listener question a little bit later that may address some of that. And, of course, that product, not surprisingly, volatility is hot. Everything associated with volatility is hot. VXX is raking in the funds as you may have expected. In fact, not even in a full month, just since February 7th, the VXX has added nearly $300 million to its bankrolls, to its coffers since then. So a lot of people flocking into that VXX product. Yet again, it is indeed one of those hot products. Who would have thought it years ago when they first listed volatility-type products that an ETN on the VIX would become the most popular or one of the most popular exchange-traded products by volume? I don't think anyone anticipated that. All right, and one of the other big stories in the volatility world over the past few years, we've certainly addressed it many times on this program, sometimes in a bit of a mocking tone, but it merits that. If you can probably guess what I'm talking about TVIX. It, of course, very famously melted down several years ago, back in 2012. If you want to learn more, of course, about what happened with TVIX, then surf on over to our archives there in Volatility Views. We've discussed it ad nauseum. Go back about 2 years or so in the show to the March-April 2012 timeframe, and we discussed that quite a bit in those episodes. But suffice it to say that that product had a lot of problems. It melted down, the huge withdrawal of funds. Everyone pretty much wrote it off as, of course, that product is pretty much done. Well, fast forward to this week, and it turns out TVIX is not done, not at all. In fact, our friends over there at Bloomberg had a very, very large write-up about the revival, the comeback, if you will, of TVIX. Its daily volume has jumped 5x, fivefold, to nearly 9.5 million shares a day since the end of last year. Of course, if you're not familiar with it, TVIX is, of course, that 2x short VIX ETN. a lot of people in the options business and the volatility business a little bit concerned about the revival of this product, given the fact that it has such a checkered history. Of course, in the 2+ years since this product really had its first problems, the universe of VIX ETNs has exploded. So you're not as locked to the TVIX as you were in years past if you wanted to have some sort of short VIX exposure. I know a lot of you out there these days have migrated to other type products like the XIV. It's not a 2X, but it is still inverse, and it hasn't had, of course, the checkered history of a product like TVIX. So interesting stuff just to see TVIX still back on the radar. A lot of people have a very short memory, unfortunately, it seems, in the world of ETPs. We've said many times on this program and other programs that you really need to be cognizant of how these ETPs are constructed and how they perform in a variety of real-world scenarios. TVIX obviously hasn't performed very well, yet it's still attracting inflows of funds, and that is a somewhat concerning development, I think. Hopefully, if you're a listener to this show, you're savvy enough to know to stay away from a product like that, or if you do use it, you will only use it in very, very short-term type snapshots, intraday even. You don't want to buy and hold that for any extended period of time. So hopefully a lot of those inflows are of the more sophisticated variety, although, of course, given what we've seen in VXX and XIV and other type ETPs related to VIX, that probably isn't the case. A lot of very basic retail flocking into TVIX as well, giving it a second life, whether it merits it or not. The other big development in the world of volatility this week, like I said, it is conference time in the derivatives world. A lot of big announcements coming out of FIA this week, including the fact that that the CBOE is planning to expand VIX hours even more. They've touched on this in the past a bit. They've talked about the fact, I know when Jay Cowley was on the show recently from the CBOE Futures Exchange, he mentioned that a substantial portion, I believe it was 8% of their trading coming from that after hours, extended hours period. They're looking to obviously add more hours so they can increase that percentage even more. They're at 14 hours, I believe, right now. They're looking to get it up to nearly 24 hours a day, 5 days a week. They still, unfortunately, haven't committed to any sort of specific time frame for this, but the pressure is on. A lot of people are looking for this, and so this is certainly something that they're looking at, particularly given the fact that the Volatility Suite is performing so well for them. We're seeing even very general financial publications and people writing about options like in Barron's and other areas, recommending writing CBOE puts just on the strength of their Volatility Suite. So they certainly want to mine that a little bit further, so they'll be pursuing those extended trading hours. And we'll, of course, be on top of that here on VolView. So as soon as we have a little bit more clarity about when they're going to start adding those extended trading hours, we'll let you know. That probably won't resonate as much with the domestic audience here, but I know a lot of you guys are overseas. A lot of you guys want more access to the Volatility Suite. This will certainly help you do it. All right, and now at the end here of the Vol Review, I am joined, better late than never, by my cohort, my co-host / nemesis, none other than good old Mark Sebastian from Swan Wealth Advisors and OptionPit.com. Mark, welcome back to the program, sir.
Good to be here.
A little bit of an interesting day from a vol perspective. We had, of course, not much of a movement in the underlying, and yet vol really getting a bit of a tailwind here. People obviously... Go ahead.
Yeah, it's interesting. You know, yesterday we sold off 22 handles. VIX is up $1.50. Today we're basically unchanged, and the VIX is up $1.15. I think it's the market resetting itself for Russia over the weekend. That could produce some fireworks. My guess is probably much ado about nothing, but you just never know with this stuff. So, you know, I think we've seen the VIX really make a good move higher. And, you know, if you're not doing anything about this, you're gonna be regretting it. I think there's an opportunity to trade into this. I have traded into this. And, you know, with some smart scenario analysis, I think there's, you know, on an afternoon like today, there's a ton of opportunity out there in spreading and in, you know, different trades that allow you to play this really pretty decent move in volatility ahead of the weekend.
Clearly, a lot of people thinking yesterday's move a bit underdone. You just said it yourself. Of course, you saw a dramatic move in the underlying indices, and yet not as much of a corresponding move. Everyone you talked to in the marketplace, retail, institutional, I don't care who it was, pretty much said the same story. People weren't really panicking. They weren't heading for the exits. They weren't lifting offers on those puts you typically see in a panic type scenario like that. And of course, we're getting some of the aftershocks of that today. People saying, "Wait a minute, we do have a weekend coming up. Who knows when that other shoe could drop? Let's put a little bit on." And you're right; it does offer some interesting opportunities for people who are savvy enough to take advantage of those. Before we roll out of the vol review, Mark, I do want to get your take on this. I know you've been pretty outspoken on it in the past. We were talking earlier here in the vol review about the kind of resurgence of a very, shall we say, checkered name in the world of volatility. I'm talking, of course, about our old friend TVIX. Big write-up in Bloomberg this week about how it essentially has been reborn. The volume is up 5x compared to the end of last year. It's doing about 9.5 million shares a day. What's your take on the rebirth, if you will, of TVIX?
Not surprised, especially when there's action like this, you expect to see that product pick up. But, I think some people will lose a lot of money on that, and they will be unhappy that they did. That is a product designed to kill it's inherently a crowded trade and blows everybody up when things are really expensive, and then underperforms when people are expecting it to do certain things. I think people lose so much money. I mean, I think if you trade that, good luck. Good luck. You deserve everything you get. That's my opinion.
Yeah, it's one of the things I mentioned, and they actually even mentioned it, some of the people in the article, including our friend Mark Shepard, who's been on this show in the past, that people have a bit of a short memory when it comes to these products. It doesn't take that long to look through some research and see what happened last time. And so if something similar to that unfolds, or you get some bad performance you don't like, you really have no one to blame but yourself at this point for diving into a product like that with such a checkered past. Let's just put it mildly. All right, and that is going to do it for the volatility review for this week. And now we're going to keep on rolling right on into my personal favorite part of the show, the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, and welcome to the Volatility Voicemail. This is, of course, the portion of the program where you guys get your chance to join us here on the old Volatility Views show, and a lot of great ways for you guys to do that. Of course, you can surf on over to theoptionsinsider.com. Leave us a comment there on the Vol Views show notes. A lot of you guys like to do that. We'll, of course, see that, route it directly to this program, get you here in on the Volatility Voicemail. You can also shoot us an email, questions@theoptionsinsider.com. Just be sure to put question for Volatility Views in the subject line there. Of course, you can also reach out to us on social media, twitter.com/options, facebook.com/theoptionsinsider. And last but certainly not least, you can also use that mobile app I mentioned at the top of the show. There's a great contact suite in there. Hit that button, and you could reach out to the hosts of all of your favorite shows, shoot them questions, shoot them comments, and we'll, of course, route them right to the appropriate program. So a lot of great ways to make your voices heard on the Volatility Voicemail, just like these listeners did this week. First question, we have a question from a listener named Charles Engel. He writes, is there any way to buy and hold VXX without paying I think he means the inherent, he wrote incurring the inherent roll risk. This is something we've talked about on the show before. A lot of these ETPs are structured in a way so that they rebalance on a very, very short-term, very, very immediate basis. And so what happens when you do that, remember how we've talked about the term structure of a lot of these volatility products. What happens is that it usually is a steepening term structure where the near-term months are cheaper from a volatility premium perspective. The farther out months are more expensive. are more expensive. So what happens if you're rebalancing on a daily basis? Well, you're selling very, very cheap vol and you're buying more expensive vol. So, of course, if you're doing that on a regular basis, you're incurring a lot of extra slippage from a vol perspective that could really dramatically eat into your returns. That is, of course, what the ETP providers euphemistically term roll yield. I like to call it roll risk. You can even call it roll cost or roll fee because it very rarely is positive unless you take some interesting steps, and we'll get to in a little bit. But the short answer to this question really is no. Specifically if you're using VXX in that buy and hold type of scenario, it's not what it was designed for. I know a lot of people really like to think of it as this securitized proxy for the VIX that they can put in their securities accounts without having to deal or mess with futures, and they get all of the bang of the buck of the VIX products without having to mess with those nasty futures. But the truth is that's not what it is at all. And because of these rebalancing, it could really be problematic for you if you try to take a buy and hold perspective with VXX. I've seen a variety of studies on this. There is no definitive amount, but the average I've seen for the roll risk, the roll quote-unquote yield of VXX, it runs, depending on the study you look at, between 5% and 14% a month. So do the math. If you hold it for a year, you buy and hold it for a year, just how much you're being run over from a roll risk perspective, and you'll realize why buying and holding that product really is not ideal. But you could do some things where you're adding futures to try to offset some of that risk. But if you're doing that, why are you buying and holding VXX to begin with? If you're going to do that, go to the futures. Don't mess around with this very, very near-term ETP. Go straight to the futures and the options on the futures, and don't mess around with it. If you're stuck messing around with VXX, only do it on a very, very short-term basis, hopefully intraday. Capture the move you want to get, and then get the heck out. You don't want to be buying and holding this product. Next up, we have a comment from a listener, goes with the handle IfThen. Maybe he's a programmer, and he writes, Bitcoin cut in half after Mt. Gox. Talk about volatility. It seems like we can't go a week these days without having someone write in with some sort of question about Bitcoin and Bitcoin derivatives. This is actually a good comment from Mr. IfThen. You're right. That is some pretty aggressive volatility. Unfortunately, Bitcoin not really liquid. Bitcoin, that of course attributed to that dramatic move, the price getting cut more than in half post Mt. Gox. But of course, a lot of the other things we would like to see in a product like that, not really there yet. They just announced an exchange this week. An exchange, I'll put that in air quotes, for Bitcoin. We'll see if that helps with some of the liquidity and transparency issues that have been plaguing that product. Again, product I'll put in quotes as well. But for now, you're right. That is some interesting volatility. Unfortunately, there's no real way to capture that. People are also writing in a lot about Bitcoin derivatives. I'll save you guys the time. You've seen, of course, I'm sure a lot of you writing in these Mt. Gox IOUs / rights issuances they're having for some of these losses or these assets that are being held within Mt. Gox that are kind of locked there. Those are, in many respects, essentially de facto options on Bitcoin. So they are essentially the first quote-unquote Bitcoin derivatives that we're seeing floating around out there. Of course, they have even more problems with liquidity and transparency than the underlying Bitcoin does. But it's interesting development. It does show that perhaps there is a future from a derivatives perspective for these products, but they do have to, of course, be listed on an exchange and have all the inherent backdrops and safeguards that people like to have when they're trading a listed product in order for it really to get the volume it needs to start being able to do exactly what you're implying here, Mr. IfThen, be able to trade that volatility, be able to arb it back and forth, be able to do some sort of dispersion against other currencies, do all the things that people who are traders actually like to do with a product like this, as opposed to just buy and hold willy-nilly and speculate, or I'm not sure if you even can short Bitcoin. I don't know where you're borrowing it from if you do. I'm sure the rates aren't that attractive. But interesting point nonetheless, Mr. IfThen. Yes, that is some volatility. So next up, we have a question from a listener who goes by the handle CBUG. He writes, are there any products on the horizon that you think can dethrone VIX from the volatility throne? And he puts in big question marks, Voldex. Of course, he's referring to that new Voldex product. Just got SEC approval from the ISC. It is on that Nation Shares ETF, or a proposed ETF, I suppose, product on the volatility. It does the implied vol of the at-the-money on the SPY, so very similar to VIX, but derived from the SPY. I know we talked about it a little bit before. I know, Mark, you're not a big fan of Voldex here. Do you think this could potentially, as our listener implies, dethrone VIX?
No, and I'll tell you why, is if you know the story of VIX, that you know that it was actually helped with the design. It was actually designed with the help of Goldman Sachs and Merrill and the banks of America to mimic a variance swap. And so, the VXO, the original VIX, was very similar to this Valdex. And the reason why the VIX is the calculation it is because it is designed to hedge around an upstairs product. And so, no, if anything's going to, I think, get near that volume, I have high hopes for VXST still once they list options. You recall the VIX futures didn't do very much until we got the VIX options. I think you'll see something similar to VXST.
Yeah, and I was talking to a lot of people this week about this very product, Valdex, and a lot of people still admit that it needs an underlying, a.k.a. a future, to really get that going. Of course, if you're familiar with ISD, they do not have a futures exchange. That raises the question of where that will be listed.
And then, of course, on CFE.
Yes. CBOE Futures Exchange lists the Valdex. That would be interesting. So there's a lot of devil in the details still to be worked out in a product like this before it really has a chance to even make a name for itself, let alone dethrone VIX. It has to have the options listed. It has to get some volume. I mean, look what's going on with VXST now. That is a much more heralded product, and yet it still is doing very, very minimal volume because there are no options on it. So this still takes a lot of moving parts to get going before a product like this could dethrone VIX. All right, and last up here on the old listener mail, we have a question from listener Tom Wills, writing out of Eugene, Oregon. Hopefully it's a little bit warmer out there than it is back in Chicago right now. He writes, I remember you discussing a VIX call strategy that could outperform direct SPX put spreads on an older episode, but I'm not sure which of your 100 episodes it was. Please help. Well, Tom, this is an interesting, actually good timing you wrote in on this because we actually discussed this about 2 years ago on the show when I was down, last time I was down at this conference I'm attending right now, the risk management conference, and it was discussed there, and it was an interesting strategy, actually. If you'll recall, we talk a lot on this show about what performs better, the quote-unquote VIX hedge, which you've all said on the show many times is not really a hedge, versus a more direct hedge like an S&P put or put spread. And this is one of the few studies I saw that actually showed the VIX outperforming. What they were doing is calendars, out-of-the-money call calendars in the VIX versus SPX put spreads. But even still, I would caution you, if you want to look at doing that they even admitted in that study that 97% of the time, if you're looking at a hedge, you're putting this on month after month, 97% of the trading days, the direct hedge is going to win. The only reason that the VIX call calendar actually outperformed was it captured those extreme moments much better than the direct spread did. So they had a few of those in the time horizon that they did their study. So net, the VIX strategy outperformed. But on a day-to-day hedging basis, the direct strategy still outperforms, which is why a lot of people like to add those VIX call kickers to their direct hedges in case something extreme happens, they can still get that. But they don't rely on that VIX as that one-to-one type hedge. All right, and that is going to do it for the listener mail segment. And now we're going to keep on rolling right on into the crystal ball segment.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, and welcome to the crystal ball. This is, of course, the portion of the program where we take a little bit of a peek ahead to see what may be coming down the pike from a vol perspective. And Mark, these are interesting times to be playing this game because we have so many macro events kind of lurking on the perimeter, on the fringes there, that threaten to give us any more plus 1% moves in the S&P on any given day.
I think that the way the market is pricing this move today, we've got a stronger chance of a multi-standard deviation rally than probably a multi-standard deviation sell-off. Obviously, this Russian stuff is interesting. But, I think there's a real strong chance that we come in Monday and some sort of deal gets done, or we come in Monday and a deal doesn't get done and everybody is like, and nothing has changed. That's my thoughts.
Yeah, it does seem a little bit peculiarly poised for more of the upside than the downside, precisely because of what we talked about in the vol review there about the flow we saw on Thursday. We didn't get a chance to get into that really. What was your take on Thursday's performance from a VIX and VST perspective?
I mean, I thought the VIX underperformed. I thought the VXST underperformed. I think that, we were already kind of pricing for that kind of move with the VIX trading 14.5 already. So part of that was already built in.
Exactly. That's kind of what we've been saying here on the show for a while now. People probably have a lot of that protection already built in. Probably another reason why we didn't see people stampeding for the exits yesterday. They already have some of that portfolio protection on, like we've talked about in the past here on the show with Jared and some of the other guests recently. When they have that protection on, the market tends to outperform to the upside, not to the downside. And when they do have it on, they're usually a little bit more, I hate to use the word complacent, but that's exactly what it is. It seems like we're seeing some of that still in the marketplace. Of course, what we're seeing today may be the counterpoint to that. Some of the more pros coming in and saying, hey, there might be a little bit more to be done here than what we saw yesterday. And then this moral of the story, this time next week, when we come back on the show, we'll have a lot more to talk about because I'll be fresh from the risk management conference, so that's always fun to talk about what we've seen here, all the great new studies, meeting up with all the great guests we've had on the show there. It's kind of like a Vol Views reunion, I was saying earlier, Mark. A lot of our guests are down there. A lot of potential guests are down there. And a lot of the fans of the show are down there, too, which is always fun to check in with those guys as well. So, but yeah, it is kind of a bit of a crapshoot. We could be off back again into the low teens, or we could be dancing with a 20 handle if Putin starts running off at the mouth again. Yep,
for sure. So it'll be interesting to see. I mean, as long as there's not war, we should be okay.
Yes, that's probably a good adage for life. As long as there's not war, we should be okay. All right, I think with that bit of sage wisdom, we're going to close out this abbreviated episode of Volatility Views. I, of course, want to thank all of you guys for writing in. I also want to thank my co-host here, Mr. Mark Sebastian. Glad you could make it today. I know it's a busy day for you guys over there at Swan Wealth Advisors, slinging SPX puts willy-nilly over there as you want to do.
Yeah.
So go ahead and give us a little bit of a take of what's cooking over there at Swan, as well as what's cooking over there.
We've been doing the Swan Re Roadshow, and it's been really, really excellent. It's been a lot of fun. Great turnout from different people. And, I think that that's going to be I'm looking forward to being involved with that. And that's really what's up.
Insurance. That's where the money is these days.
Not just insurance, reinsurance.
Yes, reinsurance. There we go. They said it was plastics back in the day. Now, reinsurance. That's where the money is. That's a bit of a dated reference. Some of our audience, I'm sure, will get that. All right, and that is going to do it for this episode. I, of course, want to thank all you guys, again, who wrote in. Keep them coming. You know how to do it. And, of course, want to thank you, Mark, for joining us. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.